follow-ups from our exclusive conversation with the M&M Group from their investor meet. Nigel and Nimesh caught up with the top management of M&M to discuss the group's ambition for its realty and the company's last-mile mobile connectivity business. Listen into what they had to say.
These are businesses that have a great market position. In many cases are leaders in what they do. Some have been playing in smaller niches and we need to expand those. These are businesses that when we started this collectively had a market cap of less than $1 billion, and we set a target of each business to get to $1 billion. There are 10 of them. And as many got closer to it, as we often do, we raise that target further and say, now we need to grow 5x. So the collective valuation of these businesses as of the last fiscal year is $4.2 billion now. And our target is to get to 17 to 20 billion from these growth gems that we have.
In both these businesses, is scalability going to be the big thing that you're focusing on and you're betting on, that both the businesses will scale up so much that they will become so large?
That's correct. Is scalability from both a revenue standpoint and a profit standpoint. And therefore, the returns are important for us as much as growth.
Dr. Shah, from a time span perspective, how long will it take? We're at 4.25 billion, if I got that number correctly. And to get to the targeted valuation that you were talking about, what's
the target for us is 5 to 7 years, so more specifically 2030 is what we're targeting for.
Okay, all right. Well, let's focus on the individual verticals then. Amit, you tell us, in terms of the real estate cycle on the whole. Where are we in terms of the cycle? And also redevelopment. All of a sudden, it's coming back in a big way.
Yeah.
How much of your portfolio will it constitute in the time to come?
Great question, and I think I get this question asked again because the real estate cycle, was slow in the last decade, and it's come off after the COVID. And I think, as I say, it's 3 years into the up cycle. This is what I call for the next few years purple patch for the industry. Overall, this industry roughly $250 billion today.
Yes.
Given what's happening to India's economy, what's happening to per capita income, what's happening to per household income, which drives the housing purchase, what's happening to a lot of China plus one, which is going to create more economic activity and therefore more and more for consumers.
Okay.
The desire for owning a home is just going up significantly. And this growth cycle will continue for multiple years, at least 3 to 4 years. Typical real estate upcycle lasts 6 to 8 years. So we are betting on another 3-4 years of healthy upcycle. And just for comparison, last financial year, India sold in organized sector 5.5 lakh homes. China, in comparison, sold 1.3 crores. Obviously, China has gone through its own tough times, corrections are happening. But it's 26 times more. Even if you say that they have multiple more cities across the country, we have 10 cities, we'll create more urban centers. But the demand for a similar size economy in terms of consumer for home will continue to be very healthy. Yeah. Your second question was about redevelopment.
Yes.
This is mostly in Mumbai right now because the land prices are quite high. There are many societies which are old. So it's a very innovative model for actually developers to come in. You give society for practically no cost a new home with extra area, corpus for them to come back, rent for them to enjoy 3-4 years away from home, and then they get new homes, and we get additional saleable opportunity which makes the economics work. While this is attractive, but we have to work through some of the challenges, and we have 1-2 projects and we'll continue to pursue that sector aggressively.
Anish, we all understand the addressable market is quite large and there is a huge demand as well in the real estate space. But from a group perspective, what is your vision? Because I've seen what happens to any company in the real estate space when the group shifts the focus. Simple example is Century in Birla Group. We've seen the stock price and the kind of numbers they've started showing up. Same is with Godrej Properties, again a real estate arm of the Godrej Group, and they've done phenomenally well. What are the targets that you are giving your team in the real estate space? And what is that's going to drive M&M as a real estate player as well over the next few years?
We are starting to see a lot of agility in our business and focus on growth in specific areas. The Mahindra brand is a very powerful one. And real estate is one space where consumers will want to buy from people they trust. And therefore, we are very well positioned. The quality we have of our products is very good. So at this point, our target, as consistent with all growth gems, is 5x in the next 5 to 7 years. And Lifespace is on a very good track to be able to deliver that. At the same time, we expect returns. And therefore, we will look at ensuring there's very strong execution. First, to deliver the promises we make to the customer, and second, to deliver promises we make to the investor.
All right, Ms. Sinha, let's get you into the conversation then. What are your top targets that you have in the near term and also in a little medium term? If you could tell us the top points you're looking at.
Sure. To just give context, we are India's largest electric three-wheeler manufacturer.
Yes.
And Anish set us out with this growth gem aspiration of 5x growth. So over the last 3 years, we have delivered 4x EV volume growth. And we have attracted several marquee investors like the IFC and the NIIF. So our goal obviously is to continue the growth momentum, deliver what we have promised, the 5x goals, which may be 5x again from now, we'll see. But we continue to work on that. And in order to do so, the way we are approaching is to really bring innovative, fit for right products and solutions for this category. This is a price-sensitive category, but they still demand the very best. So how can we leverage technology, data, analytics to really bring products and solutions which meet their needs and give a very good total cost of ownership? So that's our first goal. The second objective is to really make sales and service channel footprint ubiquitous and all over India. We already cover almost 80% of the districts of India, and we expect to increase the depth of these districts. And I think finally our story is all about customer and customer impact. And we hope to continue providing solutions that ease out the friction points in the electric vehicle journey through a series of partnerships and ecosystem innovations.
This is a classic case of value creation. This business was valued at about $50 million 4 years ago. And IFC has come in as an investor. The India-Japan Fund has come in as an investor at a valuation of $800 million.
So you spoke about it's a price-sensitive market, but it's also a very fragmented market, if I understand correctly. There are a lot of remote areas where there are a lot of unlisted players, or it's a very fragmented market, so to speak. How are you going to make this a segment where brand makes a count and you penetrate further?
So there are multiple categories in this market. There is the e-rickshaw market, where you said the low-speed vehicles, where it is truly fragmented. We are still a significant player in this space with a very premium offering, because no matter who the customer is, they always value a higher quality product as long as it's at the right price. But our core business is the L5 category, which is the auto market, which is a very consolidated large OEM market. And in that, brand is everything, brand and service. So there you don't see many fragmented small players. So that is a very consolidated market, in fact. And through the electrification, we are seeing entrants like us and some other OEMs entering in and getting shares. So there we have a significant share. And in the four-wheeler commercial vehicle space, which we also play in, that, as you know, is a very, very consolidated market.
Okay, all right. Amit, let's get a final couple of numbers from you. What is the booking targets that you'll have? I think for this year, it's around 2,500 crores odd. How do you see that trajectory move from here on?
So we have two businesses. On the residential side, we had announced 2,500 crore for F25 and additional on the IC industrial business. We have not changed the target, but we did 2,328 in the last financial year. So our hope is to easily meet and hopefully beat with a margin our target that we have given. We are not changing the guidance externally as of now on the pre-sale side.
All right, that is the top brass of Mahindra Group. This one was, of course, from Mahindra Lifespace and Mahindra Logistics and their new businesses. We'll get you more on the markets and stock-specific action on the other side of the short break.